The dollar remains in free fall mode with the FOMC meeting minutes and the Jackson Hole meeting this week. Is the dollar going to continue to sell off? Guys, Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So the US dollar has remained under significant selling pressure, really underperforming versus its peers. So if you have a look at my screen here, you can see for the past 1, 2, 3, 4 consecutive weeks, we've been heading to the downside. And obviously we've been covering ground on the reason as to why. We went over in the previous week's videos how the dollar has lost its edge after, the commence of 2024. We were to the upside because economic data was solid, because inflation remained sticky, because the FOMC stance was remained higher for longer. They weren't looking at rate cuts. They were pushing back on market pricing in of rate cut bets. So that's why the dollar's lost its edge from the start of July, really, where we've had lower CPI, inflation's cooling, various metrics on inflation showing that it is coming down. We've seen a more dovish stance from the FOMC, gearing the markets up for rate cuts, which is why we lost edge and we broke out this trend that had been supporting the price to the upside from the commence of this year. You can see in the latest week, I'm just going to put this on the daily. Okay, and we noted this last week where we had heavy resistance here at this sort of heading into the mid 103 region. Look at the various rejections, tap, 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 tap. We just couldn't break that. Upside was largely capped. And when you look here, structure, we're to the downside, printing lower highs, lower lows, lower high, lower low. And then we've had this period of consolidation where we're forming a narrowing pennant, which was gearing up for a breakout to the downside. And we can see that. Now, if we look at the latest fundamentals last week, you could just see how PPIs, producers' prices, showing that inflation is cooling, right? Remember, this is the producers' prices. What does it cost the producers for the goods that we consume as consumers, and their prices coming down? When we look at inflation on a near term, like when on the month-to-month basis, you can see prices just remaining generally steady. But the real key, what we want to look at is over the bigger picture on the annualized basis, and you can see inflation still coming down. We're well and truly remain in that disinflationary process, which is gearing us up for those rate cuts. We had decent data on Thursday, but markets overlooking that and keeping their eyes set on this inflation figures. Now, if we look at September pricing, remember, this is the Fed's watch tool, well, the CME's Fed watch tool, where we look at the probabilities of FOMC rate cut moves. And obviously a lot of the volatilities around September, obviously 100% probability that they're going to be cutting. And the focus is on whether they're going to be cutting by 25 basis points, okay, to take the target range, the target range down to a range of 5% to 5.25%. That's a high probability of 75%. Or if they're going to cut by 50 basis points. And that's just a low probability of 25 basis points, okay? So that's being priced in at the moment in the markets, all the volatility there, which this could still end up changing depending on this week, where we're going to keep an eye on the meeting minutes from the FOMC, where we're expecting them obviously to be dovish, gearing up for multiple cuts by the end of the year. Okay, obviously September, November, December, as the market's pricing in, we just want confirmation of that. And how dovish are you going to be? We've got Powell speaking. This is all important ahead of the FOMC's meeting on September 18th. So the way things are shaping up, we are looking for dovish stance this week from those from the meeting minutes and Powell speaking. Okay, it just depends whether it's going to be a probability of changing for that 50 basis point cut, or whether the probability is going to remain at 25 basis points. Now, if we look at the dollar index here, okay, we do look vulnerable to heading to the downside in towards that 101 figure. And obviously, if we look at euro on the flip side to that, because obviously euro makes up over 50% weighting in the Dixie. And you can see we've had a left shoulder here, a head, a right shoulder, breaking out of that neckline, that inverse head and shoulders. We had pick up momentum. Something that we were eyeing as well was this flag. Okay, nice breakout of that flag, retested this neckline, and it really does leave us open for a run and go and challenge these highs of, are those the highs of 2023? Not the highs of 2023, but the highs of December 2023 into that psychological 111 mark, okay? And we'll touch upon the euro fundamentals in a moment, but very, very big week once again for the dollar, but looking vulnerable given the current structure, given the current underlying fundamentals. So yeah. Also expect some volatility around the Canadian dollar this week, because we do have key inflation data, right? And it's important right now because the Bank of Canada are currently in a rate cutting cycle. They've been cutting rates. And obviously, if inflation continues to cool, that just further bolsters the case for rate cuts. And we're also going to keep an eye on retail sales. Reason being this important is because, look, retail sales have been contracting. If the consumer's not out spending money, and retailers obviously not doing well, right, as a result of consumers not spending, that's a sign of economic lagging, right? And if we get economic lagging, what does that mean? It means we need more rate cuts, right? It just further strengthens the case for rate cuts. We cut rates in times of economic downturn. So keep that in your mind. That could invite some CAD weakness across the board versus its peers. Now, we're just going to look at dollar CAD as we always do as a base case. You know, we're looking at currencies versus the dollar, just as a base case, but you can look at CAD versus other peers. And if we look at dollar CAD, this isn't falling necessarily because of CAD strength, because CAD, in my opinion, still remains vulnerable across the board versus some of its peers. It has been weakening within recent times, and that's just because really one of the key factors is the Bank of Canada are moving faster with rate cuts. And if they're moving faster with rate cuts, it means more outflows from Canada. Remember, foreign investors are seeking higher yields. Interest rates are also the yield that investor gets on their investment. And if a central bank is cutting rates, it's turning off foreign investors, so there's going to be outflows. So CAD weakness, strength into other currencies. Dollar CAD here anyway, reached a heavy supply area at this mid-38 region. Can you see? We haven't been above this for a while. Okay, we actually haven't been above this since May 2020. So it's a very significant zone, but albeit this is mainly just because the dollar's losing ground, not necessarily CAD's been strengthening, but just sort of keep that in your mind this week where we could see a bit of an uptick, this challenging that 38.50 zone again, potentially, if those, that inflation data on Tuesday cools, that'll see this pushing to the upside, but ultimately that could be outweighed, and that any rally that we see in dollar CAD could be very much capped and vulnerable to selling just because of that dollar, the dollar situation, the dollar narrative of more rate cuts potentially, depending on how dovish Jerome Powell is. But expect some volatility there with Canadian dollar as well. We've also got some big data points from both the Eurozone and the UK in the form of manufacturing and services PMIs. Now, they are a very decent economic indicator. The reason being for the Eurozone is a decent sized manufacturer. We've got a lot of cars being produced in the Eurozone. You've got your Ferrari, your Lambo, you've got your Fiat, Citroen, German cars, BMW, Mercedes, Volkswagen, you name it. There's a ton of cars that are manufactured obviously within the Eurozone. And then obviously services makes up a big part of the Eurozone and also for the UK. So these are key economic indicators. Now, if you look as a whole across the board, these numbers are generally expected to remain steady, if not potentially slightly higher for both sort of the Eurozone and the UK. Now, this is really key because both the Euro dollar and GU have been in a trend to the upside, and they could really take further advantage if these numbers remain steady or if not beat expectations. So we already touched upon the Euro, okay, with this inverse head and shoulders. And really, if you measure as a textbook scenario, when you measure the head to the neckline, that's what you're typically looking for your target on a breakout of the neckline in towards sort of 112 territory. Now, if we do conquer that 111, as I said, that's the next major target. If we do conquer 111, we have every right to go and challenge this 112 area. And now that is the high of 2023. And we could go and potentially challenge that. So it'll be a base case of this, potentially this zone holding, okay, where we're clearing that psychological 110, moving into 111, see how we deal with that. And obviously this is very much dependent as well on obviously the dollar situation, the dollar fundamentals, which you covered, but we could end up breaking out, retesting and heading into that 112.50 area. Not obviously in 1 week, depends how much volatility we get next week, but that could have a clear path to the upside so long as the Eurozone's fundamentals, i.e. these PMIs are solid, and we get dovish fundamentals from the dollar, i.e. dovish Jerome Powell, FOMC meeting minutes, euro dollar can trend to the upside. And same with GU really. When you look on a weekly, we had a big reversal candlestick. Well, say a big reversal candlestick. We had a reversal candlestick there the week before last, followed up. That was very much validated with that bullish closure above there. Sorry, this is me doing some back testing and some strategies, but we had a big breakout to the upside here, and you can see we're being supported to the upside as well. Bit of a ascending channel, ascending trend line there. Look, let's mark it up. You just see that's valid, trending to the upside. Breakout of a bit of a flag here, which I was monitoring and I was sort of capitalizing on myself last week. We cleared decent daily resistance around that mid-28 region. Can you see along that dotted line, all that resistance there? Big breakout, surge of momentum to the upside, hitting targets to the north from my side. And another confluence here was this, at that daily resistance is a bit of an inverse head and shoulders, left shoulder, head, right shoulder, and breakout of that neckline. And it's just sort of flying really. And when you look on the higher time frame on a weekly, I'm just going to put it on daily, just so you can see the next major zone really, we're going to have a bit of resistance heading into 130. But if we deal with 130 successfully, these highs here of July, then we can very much go and run in towards well firmly into 131 territory, right up here, okay, into 131. Double O. Okay, so plenty of volatility and potential upside for GBP and Euro as well versus the dollar. So once again, another week filled with decent economic events and talking points, plenty of volatility expected. Other than that, guys, have a blessed and amazing trading week, and I'll catch you on the next video.